Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time, so if you'd like to watch it again, you can do so there. And we'd love it if you'd click on the bell. You'd also subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the Handouts tab of your GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the different products we offer at FX Choice. If you're watching this on YouTube, you need to click show more in the description box and you'll be able to see them there. We also just remind you as well, please, to fill in the survey that will pop up at the end of today's webinar. Helps us improve your webinar. Okay, so without further ado, Trevor, I'll pass it over to you.
Yes, thank you very much, Dan. Thank you very much to everybody for joining us. And let me just repeat what one of the things that Dan said there. I really like to have questions. Anything, we're going to go through the currencies and the cryptos and the commodities and the stock indices, the fairly obvious ones. But if there's anything else you'd like me to cover, please send Dan a message in the chat box. And also, if you have any questions about something I've said, please send Dan a message in the chat box and he'll interrupt me, and it'll be my pleasure to answer those questions. All right, we're starting with the euro, but before we look at the euro, let's look at the dollar in general. We will see, and when we look at the absolute charts in a moment, the dollar pulled back very slightly during the week, but the picture remains essentially unchanged in the relative rotation graphs. So furthest on the right, that means most outperforming the dollar. We've got the commodity currencies, New Zealand dollar, Australian dollar, Norwegian crown, and the Canadian dollar outstandingly on the right-hand side, still pointing, easterly generally. So looking for outperformance versus the US dollar. In here we've got the pound and the Swissy, but here behind, underperforming on a weekly basis. So this is each dot here, this is Friday, Thursday, Wednesday, Tuesday, Monday. So on the week, lagging, the euro lagging, and weakest of all, and right over in the lagging quadrant, that's with a underperforming with poor positive momentum, is the Japanese yen. So we're going to look at these ones here, the ones on the right here, and the Japanese yen as well, but of course the euro and the pound. Okay, so let's have a look. First of all, the euro. I'll look at the weekly chart first, just to see that we have got these lower highs patterns in play now, lower lows pattern. Bit of a rally going on here, but the MACD is still negative. So if you use that as your long-term definition, it's a bear market rally. On the daily chart, here's this rally going on here now. We are between the 20 and 50-day averages. The MACD here in this horizon is rising. The RSI is bullish. The MACD, the measure of the trend strength, is weakening. So the trend is weakening and the Bollinger Bands are narrowing up. So this means this current move is also weakening. So we're coming back, of course, because we're on the way down towards significant resistance levels. The 1650 area where we are now is resistance, and then we've got lots of other layers of resistance, but the most significant one is at 119 right up here. As far as support is concerned, we've got support at the 1523 low, and really that's it. Now, I think this move is actually beginning to lose momentum, and this would be a fairly obvious place for it to stall if it is going to resume its zigzagging lower pattern. I'm just reaching for Fibonacci retracements here to see how much of a retracement this is here, and you see it's exactly 38.2% of this fall here. So first of all, it's a logical place to stop. It's also a resistance level from the chart, but also if it does stop here and turn down, that will be very bearish for the next leg lower, because we've got a long impulse move, a very weak reactive move here, and therefore the next move that follows it could be extensive as well. So it hasn't happened yet. It just has got the first signs of losing power on this advance inside what I think is really a downtrend. So we've got this slight wobble in the dollar, but the dollar is strong. And we saw how in the RRG chart, how the euro was lagging. Now let's look at the pound sterling. So again, let's look at the weekly chart here as well. So I put this dashed line, resistance line here. It's a dashed line because it doesn't match up the highs perfectly enough, but generally we can see we've got a lower high pattern. We've got a doji here, so an indecision. So again, it could be stalling. The MACD is still negative on this, and so the trend on sterling is down versus the dollar. On the daily chart, we are stalling, I think, below the high at 139 and 140 levels, these lower highs in place here, and maybe we're in the process right now of putting in another lower high. The RSI has come down through 65 from above, you know, in a downtrend to get an RSI to go above 65 and then turn down. Many people consider that a sell signal. Also, the Bollinger Bands are starting to expand, so energy is increasing in the market. You know, I won't be speaking to you again until next Monday, but I wouldn't be surprised if we just seen the high for sterling will start to move down during this week. It does look as though it's run out of steam on the upside. But we'll see. If it breaks through the resistances at 138.50 and more importantly 139.50, then the 140 big round number becomes a target. But at the moment, my bet is that it's going to stall. Now let's look at these commodity currencies now. So starting with the Canadian dollar, remember far over on the right here. So this is dollar weakness, Canadian dollar strength. The falling price is a rise in the Canadian dollar. Slight loss of momentum here because of the recent wobble, but basically it's moving down, very decisively down. Here's that picture on the weekly chart. We talked before about high, higher high, lower high, head and shoulders top in place. With 122 was the target for that. But the picture here is on the weekly chart is bearish for the dollar, bullish for the Canadian dollar. And then going back to the daily chart, we're pulling back. We put now quite some important resistance levels above us. Here 124 level, and then this big consolidation here, which is the head and shoulders high, higher high, lower high pattern, is significant resistance. The trend is strengthening. It's at 25.9, the ADX, and so that trend is down. The MACD is negative. The RSI is, yes, it's oversold, but it's down there because it's weak and it's still pointing downwards. So this is a weak market, which looks like getting weaker. That's dollar weaker, Canadian dollar stronger. Norwegian crown was the furthest one over to the right, one that we favoured for a long time, and here it is here moving down. That is the Norwegian crown moving up. So on the weekly chart, here it is. Now we're coming down to important support level around the 820 level, or a little bit below that 810 level, and we're moving quite purposely towards it. And doesn't this look like we're high, lower high, lower high, lower low, lower low, lower low, continuing that long-term pattern? And I would not be surprised if we break that low and keep on progressing down. The weekly technicals are very poor indeed. The MACD is negative and the RSI is low, but it's pointing down. On the daily chart, well, we just probably had a bit of short covering at the end of the week here, but I think it is looking weak, and the Bollinger Bands are expanding. Trend is strengthening, the downtrend is strengthening. The RSI is weak and the MACD is weak as well. This does look that existing trend of our performance in these commodity currencies is going to continue, and there's good sense in that, isn't there? But what about right over on the other side? We have the Japanese yen. Just let me remind you of that picture here. So we've been looking around here, but here, Japanese yen. Everything left of this vertical line is underperforming the dollar. So if you were sophisticated, you know, Norwegian crown, Japanese yen might be a good pair to do, rather than do different trades, for example. But let's have a look at the Japanese yen there. Here it is, and again, start with the weekly picture here. And of course, this is the strength of the dollar here, and it is coming to a very, very significant resistance level. Let's see where this comes from. Look at that, how important this level is. We've talked about it for a long, long time. High 2017, 1, 2, 3 highs in 2017, 2 highs at in 2018. Then ever since then, we've been below it, and now we're back to it. And I think this will be a significant resistance level. Look what has happened every time we've been there before. Resistance level for the dollar. So this underperformance of the Japanese yen potentially could change here. So, but of course, if the dollar breaks up through here, that will release a lot of energy, and we could be looking quite easily at 120 again there. So watch out, there's something big happening. You know, in technical analysis, we look for significant levels for big event, big moves to happen from there. One of two things is going to happen from this level. We're going to break up, and that will be very big because that's a multi-year high there, going back to the beginning of 2017 then. And the 118 level, that would release a lot of energy, and I think it could be quite a swift move up to there and put a massive band of support below. Or it can fail here, and the dollar could go down, and the yen could recover and join the other currencies, which are moving with the dollar, strongly with the dollar. So watch out for the action here. At the moment, it's just weakened off a little bit, hasn't it? No surprise, given the importance of the level. That doesn't mean that it is going to fail, but it is no surprise that it has hesitated at that level. So I expect that we'll be talking a lot about this in the coming weeks, the Japanese yen. So let's just have a look at the commodity sort of trade here. I've chosen the New Zealand dollar versus the Japanese yen. Let's look at the weekly chart of it here. So New Zealand dollar divided by yen. So rising is the New Zealand dollar, outperforming it. Broke away. Let's take away that Fibonacci retracement level there, and made that break up at 80, and moving towards some significant resistance levels. But that, could release an enormous amount of energy, couldn't it? If that does break, so this leg out the way there, particularly if we break 84 there. So, wow, there's a lot to play for. Yen is your pivot. Usually it'd be the dollar, and then you've got the commodity currencies on the other side of it. All right, so I'm going to move on from the currencies to the cryptos now. Anybody, Dan, have you got any questions so far?
Trevor, not so far. No, if you do have some questions for Trevor, please do feel free to ask them in the questions tab, and I'll pass those on to him at an opportune moment, or if you want a particular instrument to be covered.
Okay, thanks. Okay, now let's look again at the relative rotation graph, but this time of the cryptocurrencies. So the vertical line here is the US dollar. Everything to the right is stronger than the US dollar. The furthest to the right is Bitcoin, then Ethereum, then Litecoin. I actually think this rather understates that order there. Bitcoin strong, Ethereum quite strong, Litecoin is way, way below its highs, but it's still in its way steady. So this is too much data here. I like to have 5 days of data: Friday, Thursday, Wednesday, Tuesday, Monday. That's the action. So this week weakened off very slightly during the week, but it's still outperforming considerably. These are big numbers here, 114. That's a 14% outperformance of it. So let's have a look at the actual charts. First of all, Bitcoin, let's look at on the weekly, just to admire this action. So we're toying with the April highs here. We probed through it at the end of the week and powered up, made a new high. Lots of stops, lots of people bought as it broke this spike high here, and but then it retraced quite sharply from there. On the weekly chart, it is bullish. Okay, it is bullish at this point. On the daily chart, now here's the action. Here's the stop losses going as we've made new highs, and then we've come back here. To me, I think this is a sort of consolidation after the break, and the RSI has come back to 50, and then it's turning up here. I think that, you know, in my opinion, this market has pulled back to the break point, which often happens after a break, and is getting ready to advance again. And the RSI pulled back to 50, is turned up again. The MACD is negative, that is true at this point, but we're still moving up with higher lows and higher highs in here. Moving averages are all pointing up. I think it's just a typical behavior of a break to new highs, pullback, and then if it does continue to be steady today, then I think we can say there's just a pullback after the break, and then we'll move upwards after that. So yeah, that's how that does look. Not so clear or not so obvious at all on the Ethereum. Again, we also broke to a new high on Ethereum, but this was really much more just went to the high and then pulled back from the high and made two highs, which are almost identical here. And then now it's starting to consolidate again above this resistance point here, which is now support at 4,000, and it seems to be stabilizing. The technicals look good. The uptrend is strengthening. The RSI is looking good. The MACD is looking good to me. I think that this too will follow Bitcoin when it makes a new high, be dragged up with Bitcoin, but the energy is in Bitcoin itself. Litecoin, I think Litecoin is really, well, the problem with Litecoin is it's so far below its high. You know, these others are all playing with these highs here, and we're so far below here, below 61.8. That's a, you know, when we went down nearly 80% of the advance, this was catastrophic for the bull market here, and it always meant that it would be a big struggle to recover from that, and that's exactly what we're seeing. This one is lagging behind. Yes, it's steady, but that's, you know, as they say, when the wind blows hard enough, even turkeys can fly, and this is a turkey, I'm afraid. So it is steady. You know, it is steady. It is going up. It's still on the right of the dollar itself, but you know where you should be in that complex. Okay, so I'll move on from that. We've got no more no questions, but we've got an interesting picture developing. We've been seeing this in developing over a bit, which is
Trevor, can I stop you there? Can I stop you
yes.
there? Can I stop you there? Sorry, we do have a question, but it is about gold.
Okay.
The question comes from Vahid. Thank you very much for your question. He asks, I'm thinking about gold. According to the chart, I believe the bearish move is most likely to happen. What is your idea about it? Well, I'm sure you're about to answer that question, aren't you?
Yes, I am. Okay, the first thing I'd like to do is to highlight the gold-silver ratio. So that's what we've got here. So this is gold divided by silver. So when it's rising, that's gold outperforming silver. And then now, currently, we've got this decline going on. Now, we picked up on this several weeks ago, and this change in trend. And so silver is the best of the two. And that trend seems to be continuing as we break important support here in the ratio itself. So let's look at gold first. So here's gold, and I'd like to do the weekly of it first. So gold, I would say, broadly, we can say it's been moving sideways, ranging from 1730, 1750 area up to about 1830 area here. This consolidation area here, and we're around about the middle of it, maybe looking a bit steady in that range there. So going to the daily chart, here is that steady in that range there. Forgive all my lines here on it, but there's a lot of resistance and supports and Fibonacci, so that clears it up a little bit here. so we've got you know, a little bit of a steady movement going on, breaking this high here, but there's resistance and resistance and resistance all up to the 1820 area. So we're moving steadily, gently, steadily upwards here. And I think that is the case. We've got good support. You know, we've got 1760 we don't want to break. This is more important is the 1750 and then 1720. Crucial, doesn't break, and then there's spike low down here. So quite a lot of levels below us and also levels above us here. But given the choice with my colleague, I think given the choice, this is where I'd rather be, which is in silver. Now remember the gold-silver ratio favoring silver. Well, this is silver on the weekly chart, I think, turning out breaking a significant downtrend line and crossing over on the MACD. The RSI turning up. This is on a weekly basis, and then here the chart looking a lot better. We're challenging this $25, we're just below $25 resistance level here. It is approaching it very strongly. Looks as though it's probably going to do it. The Bollinger Bands are expanding, so it's telling you it's gaining energy as it approaches. And then we've got other levels here. So of the two, I think you've got mildly bullish in gold, but strongly bullish, I think, in the silver. And so I do think that silver is bouncing from the bottom part of its range, and it's moving up through the range. And at the moment, it's got quite a lot of energy on the upside and can go further. Yes, there's a lot of resistance. It's got a face, but it really doesn't probably intensify until you're above 26, 20, into the 27 area up there. So still some room to climb there. So I don't know, could you just repeat what the person said about gold? It said that it was steadying, and did he say something else?
Yeah, he says, I believe the bearish move is most likely to happen. What is your idea about it? That was all.
Yeah, yeah, well, you see, this one is, there's so much resistance here. We've steadied up, but in a not very, you know, rather weak way. Compared on gold, compared to silver, and you know, maybe the gold can stay still in its range and silver can move up, or gold can drift and silver could move up. But it is coming up into resistance. So if you watch the behavior at the resistance levels, look for these upper shadows. You know, trying to break that high and then rejecting it, that's a sort of negative sign. We've got another resistance level, another resistance, lots of waves of resistance level just above us here. It's going to be quite hard for it to move ahead, but it's not moving down. Personally, I'd be hesitant about shorting it quite yet. We haven't had any, you know, signs of it really turning over yet. It's just a weak advance that's taking place. I think it might be a bit early to sell it, personally. Okay.
Well, actually, Trevor, whilst I've got you, we do have another request from Roland. Thank you very much. He's asked to take a look at copper. Now, we don't actually offer copper at FX Choice, but I think you can. Do you have the charts there? Could you take a look at it?
Yeah. So this is COMEX copper, New York copper, not LME copper. Just happen to have this here. Patterns are similar between the two. But let's go to the weekly chart here. So we've had a giant bull market. So that's the background for those of you that are not familiar with it. We made a high back in the end of April. We came up and retouched that high last week and then sold off hard in the week. So it's not a double top. We have to break $4,000 to confirm that double top. It says 4 here, but it's for 4,000, and to confirm the double top. But we stopped at the same place twice. On the daily chart, here it is. That's that very significant previous high here, and we've come off quite hard from it. But personally, I think that we're come back to a good support level around 4,500, 4.45 if you like, as well, 4.45 high as well. So we're coming back to support level where I would not be surprised to see it stabilize. The RSI has corrected its overbought condition, come back to 50 in here in the strong uptrend. So I feel that copper is going to stabilize close to here, and then we'll see whether it's ready to have another proper go at breaking that high. If the market starts to gain momentum on the downside, so punches into this area in here, the 420, big range here at 420, and the bars candles start to get bigger and the volume starts to increase, well, that destroys the message. But I have my strong doubts about that. I see this as very, very strong support for the market, and that we're probably somewhere close to stabilizing before we have another attempt at the high of it. But the action at the moment is definitely, the candles are down, and it hasn't stopped going down yet, but the support is just below us. So I think we're close to it stabilizing. Then we'll see how it behaves there. And my intuition is that it will stabilize and then have another go at breaking that top properly. Okay. I hope that's answered your question.
Actually, Trevor, that wasn't all of it. I only asked half of the question there. Roland also asked if we can take a look at something which I'm not familiar with, Msci emerging markets.
Right. Yes. So that's an ETF fund. Well, probably he trades it as an ETF if he trades it, but it's an MSCI index. Let me do that when I go on to the equities. Okay. Okay. I have to go to a different screen, but because it's not my list here, I get it from a different list. Good one. Yeah. And the emerging markets versus the SPY, I'll have a look at that as well. Versus the US market, which is probably when people think of emerging markets, whether they're good investments or not, they're thinking of it versus the rest of the world or the US market. So we'll have a look at it. Good question, but unfortunately not one of the things we trade, is it? No. But we don't mind. Okay, let's have a look at the crude oil. I look at the Brent crude oil. We've had 7 weeks now of rising prices, so we've been bullish. It has gone up for 7 weeks, and it is still steady at this point here. It's a very, very important level. Let me just show you how important it is by bringing in more data here. So we are testing this 2018 high here. The WTI has broken it, but the Brent crude has not broken it yet. But what does it look like? The MACD is positive, the RSI is positive, but it is looking quite extended here, a bit like this point here and this point here. It does look very extended. On the daily chart, it's going up in quite an orderly way. Everything's bullish about this. The moving averages, the Bollinger Bands, the ADX is saying 35, strong trend strengthening. The RSI is undeniably high, but it's still pointing upwards, and the MACD is also still bullish. But I don't want to spoil the party here. I've been bullish with this, and I am still bullish personally about it. But there is a good reason not to be bullish, and that is the following. Just bear with me 1 second while I get this up. So in a second, I'll show you what it is. Next choice notes, and let me go to here. Okay, are you seeing?
Yes, we're looking at the crude oil, yeah.
Yes, seasonality. Okay, just to explain what this chart is, the red line is the WTI, not the Brent, but the WTI spot price. But what is this grey area in here is the average of the price action averaged from 1986 to 2019. So in other words, till last completed year, and indexed on the left-hand side. What you see is we've got a strong seasonal pattern here. This is this year. So this year we went up strongly during this period. We had a flat pattern on average here, but we went up strongly here. We did go down in this bit here, which was counter seasonal, so it doesn't have to go in the seasonal direction, but then it rose in here, and so it's risen. But what I wanted to point out to you is seasonally, we have a very strong, and this is the weakest time of year for crude oil seasonally, and here we are. We're still going up, and but this is coming into the winter months, you know, driving season and all this sort of thing. Apparently, it's been mild in the States, and so the driving season is extended and things like that. I don't understand fundamentals of this at all, but I just want to warn you that we're coming into a seasonally weak pattern. We've got great respect for seasonal patterns. After all, they've been a good guide to us on the US stock market. But you can't deny this one. I would be wrong if I didn't show it to you. But you know, on the other hand, what I see is a very strong market that looks like it's going to get stronger, and it's about to break up. And if it does release, I think it will release a lot of energy, which could take us well over 100. You know, if I go back further here, this is so. If we do clear this high here, which we're very close to doing, there isn't really resistance until we get up to this big triangle here, 2011 to 2014 triangle, centered on $110, and a bit between here and there, we came down very fast, so we can go up really easily. There's little friction. So I think that if we break that high, it could release an enormous amount of energy on the upside. But if I'm allowed to, I'll say except that there's a very bearish message from the seasonals. Okay, so let's move on to the stock market. So before I go on to that emerging market, just make that more useful. Let's start with the US 500. And you know, here we had that weak period that we saw from the seasonal chart. It was like clockwork, actually. That's the date it started and the date it ended. Now we're going into the seasonal message here of this is usually the strongest period of the whole year. It's the end of the year. The last quarter, it's more than a quarter, is strong, and you know, it started to go up right on time. Came back below 50 on the RSI in a strong bull trend, and look, you know, looks really good. So now we're back to the highs here. Now, many technical analysts are getting very excited because there was a doji on Friday, and the doji is a message of indecision and can be a topping pattern. But I think a lot of people were a bit sort of overexcited about what this means. First of all, it isn't a doji unless we break the low of it. Okay, so 4,524. You need to confirm it's a doji. That can easily be done. And then we've got the message of indecision. We need to follow, so we need to break that low. We need to follow through on the downside. Now, in itself, it does sit on significant ends of trends occasionally, but it didn't cause the top in the market. That's a coincidence. But it does indicate if it fulfills by breaking that low, we might have a 3 to 5 bar decline from there. Okay, were you saying something, Dan? Sorry? No?
No, that's fine.
No, okay. I thought, oh, I'm hearing voices.
No, it was nothing. It must have been just a ghost in the machine.
Yes, it's a ghost in my head. But other than that, which is a very small bearish pattern, I think this market looks exceedingly bullish, and I think it's more likely it may have a small pause or interruption, a temporary interruption, but I think the most likely is that we will be strong into the end of the year, and the low is in place, and we're on our way up, and we're about to make new highs and push on ahead very strongly from here. Now, you'd think it would be the same on the Nasdaq, on the Tech 100. But we're not at the high yet at all in it. So here's the weekly chart. We had the pullback, we've had the steady period, but we're not at the high yet. We're below the high. So this is weaker. So the glamorous tech stocks are not leading the way up. It's actually being led up by other growth stocks and growth stocks, other growth stocks. But it's also a little bit weak at the previous high here. So if we do get the doji and we get a little bit of weakness in the US 500, then I think that this might be even weaker, and so we may get some big some tech sell-off leading this index lower. Moving to the UK 100, I've never liked this, as you know, but it has been steady lately, and it is moving up, and it has broken this high here. It's trading a little bit above. But what I'm mesmerized by is this here, this whole area here. This is the fattest cigar that I can draw here. I'm going to put the cigar in for next week, and it's fat. We punched into it, but look how it's stalling and losing lower highs in place here. I think this is a concrete ceiling for the FTSE. I think it's going to struggle, for years really to get through to make a new high. I think this is too big a resistance here. We spent 4 years forming this high here. There's a lot of overhang in the market. So yes, we are moving up quite impressively, I must say that. But I think I'd rather be elsewhere if there is a much more obvious and attractive place to be if you're a bull of the stock market. Then the DE30. So here too, we've got the, this is the equivalent of that UK 100 high. We broke through that at the beginning of the year. We pushed ahead strongly. It's looking a bit weak here now. You can see the MACD is negative, and the RSI was very negative and has bounced back to the 50% level here. I don't really like this one at all. This again, if we do get any weakness in the United States, this could be really hit us hard here. Lots and lots of resistance above. We have had a bit of steadiness. It is steady currently. But I think it potentially could give way on the downside. It's going to struggle to push on, certainly without the help of the US market. So watch that. But there's a clear message here where you should be. So let's just look at the EEM. I shall add it to this list here because the gentleman may be back and might ask me again. So let's insert the row here, and it's EEM. iShares MSCI and ETF here, and there it is. So let's look at it on an absolute basis at the moment. So on the weekly chart, it's been drifting as an index, lower highs in place here, lower lows in place here, and the MACD is negative and the RSI is about neutral. So let's just take that general message. Now let's do it versus the S&P. So given your money, which would you rather put your money in? And just make sure this is a weekly chart. It is weekly chart. Okay, so it's much. So this is the emerging markets divided by the US market. And since the MSCI created the index in 2003, we're at a new all-time low. So the heyday of that was back in the 2010s, and then since then it's continued to underperform. I think it's still continuing to underperform in the short term, but of course there are ups and downs in all that. Let's go back to the absolute chart now of it. So I think that if you're a trader of it, it's drifting. That is for sure. But we've got this channel here, fairly defined channel. On the downside, I would use that channel. Maybe you might think flag for it, because we did have that good run up earlier in the year, early in the year actually, and then we've drifted down from it. Could be a flag. We could have another leg up. So on the very long-term basis, decade basis, it's performing very poorly, certainly compared to the US 500. But on an absolute basis now, it's drifted and it's continued. It hasn't broken out of that trading range. You've got the channel there breaking up. Out of it would be pretty constructive, given that this leg was so strong and the pullback has been relatively weak. So there are ups and downs in this, and it could come back to life. But would I do anything now? No, I wouldn't. It's actually still drifting, and we could put in another high in the channel and turn down again. Couldn't we very easily do that? Okay. All right. Any other questions, Dan?
No, that's it. Thank you very much, Trevor. And thank you very much for attending this week. Please join us again next week, same time, same place. And don't forget that we're posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, please go over to our YouTube channel and you can do so there. And don't forget to subscribe and click on the bell to get notified. Anything else to add, Trevor?
No, there's quite a lot of things to watch. Watch for dollar resumption, look for the US stock market to maybe take off. Look for the UK stock market to somehow not notice that was happening, watch those currencies still dominated by commodities. We've got a bull market in commodities, the crude oil, and copper, and other commodities are really having their time at the moment and eating things up and causing inflation concerns. But thanks very much. Markets are very interesting, and may the trend be with you.
And also with you, Trevor. Bye, everyone.
Yeah. Bye-bye. Thanks, Dan. Bye-bye.
Bye.